Hey everyone, happy Sunday night and welcome into our Trade to Black podcast. I'm your host, Shad Dales. Interesting show here tonight as we kick off an interesting program. It's called Small Cap Sundays as we dive into specific companies that we're watching across the world that you may not be familiar with. Why? Well, these are real companies trading on real exchanges and producing, most importantly, real revenue dollars. So how do we plan to do this? Let's welcome in the professor. TDR, lead financial writer and head of research, Bill McNarland. I know you've been doing a lot of work. I've been promoting a lot of this over the last couple of weeks during our Trade to Black podcast during the week, but I'm excited to get this. I know we've had a few viewers reach out to us, but there's as many as, I think, a couple thousand companies that you've seen. And I think most importantly, you really want to compare the difference between small cap, micro cap, but we're going to dive into this and really walk people through the requirements as to why these companies interest you, right?
Absolutely. I think the big line in the sand is we want to talk about companies that as business people, we would be interested in investing our own money in.
Yes. And these are not, I don't want to say boring because some people might find, I'm not saying my opinion is, the be all and end all, but let's face it, in this day and age, especially with a lot of the, podcast realm and the type of investors that it attracts consuming content on these platforms, crypto, cannabis, psychedelics, AI, tech, beverages, gaming, lifestyle, boutique, casinos. These are the types of companies that we plan to dive into, right?
Absolutely. Just stuff that we want to read about. Just naturally, when I'm looking at stocks, I'm more interested in reading about these types of trends than I am about an oil refinery.
Amen to that, right? Yeah, I think most importantly too, and I think it's important for people to understand the current landscape right now. There's a lot of banks that basically are not putting a lot of dollars and cents into research anymore. They're making a lot of their monies based on when companies go public because as both you and I know, and a lot of people out there realize that the amount of public companies that have gone public over the past 10, 15 years has absolutely exploded. And that's where they get their money. The challenge is now that some of these micro cap, small cap companies that are doing real revenue don't have the proper research, there's no coverage, and often get lumped into the same category as these pump and dumps. That stuff that I've learned, I know you've explained that off topic or off camera with me as well, but maybe you want to elaborate on that a little bit.
Yeah. So the businesses that we're looking at in the small cap space are huge.
Yeah,
So small cap is now defined as companies that are 250 million in market cap to 2 billion.
which is a big number.
Yeah, like the median company is 800 million. Can you imagine if we started a business and we exited for $800 million? That means we knew what we were doing. These
That's
are
the
real companies.
that's the entire cannabis industry based off of those
Yeah.
numbers, right?
Yeah, like it's wild. Like and the average these companies are trading at 1.1 times revenue. So that means that their revenue is in the same area around 250 million
Yeah,
to 2 billion.
yeah.
It's huge.
So before we get into some examples here tonight, I just want to quickly remind people, all views on the Trade to Black podcast and the guests on this podcast are purely opinion. You should not treat any opinions expressed by us or our guests as investment advice. And the views on this podcast are solely intended to be informational and are not investment advice. Okay, let's first begin. Questions. I know many investors have pertaining to the small cap space. Let's break down a segment as to what's going on here. What does this mean? And most importantly, why our viewers should care. So walk us through maybe the difference between a small cap and a micro cap. And again, kind of like the landscape that we're currently in right now.
Yeah, so globally there's 50,000 stocks.
Okay.
31,000 of them, or over 60%, are micro caps.
Okay.
So that's not what we're talking about today. There's a little bit of mega caps, and there's some large caps, some mid caps, but there's 12,000 companies globally, about 25% of all stocks that are small caps.
Okay.
So they often get thrown into this micro cap speculative area. And a micro cap doesn't mean it's speculative, but that's what people think. But this small caps are very large companies that are often neglected by investors. These companies are really struggling to get noticed and typically don't have research coverage. And I'll back that up. I did a lot of work on this to come up with the actual number. 85% of small cap companies do not have research coverage as reported by the big four research consolidators, including companies like Bloomberg, Reuters,
Yep.
and Capital IQ.
Are these companies in North America or are we talking companies globally?
They're all over. So small caps, I can actually give you the statistics. 24% of them would be in the US.
Okay.
And then outside of that, Europe is quite large, but the rest of them are just in different parts of the world. And we're not going to say that we're only going to look at North American companies. We're going to look at interesting businesses anywhere in the world.
So if you were to translate 24%, let's say in North America alone, let's say a lot of our viewers just want to focus on the North American market, what would that translate into? Just a rough idea as to how many companies?
Small caps in the US, we have 1,457
Wow.
to
So a
look
lot.
at. Asia, there's 8,000 small caps. So there's a tremendous amount that have huge revenues that are completely unknown to viewers.
How accessible is it for investors here in North America to invest in some of these Asian companies?
I can't make a comment based on the brokerage firms that
Yeah.
individuals are using. I know that with my brokerage firm, I can buy any of these companies from my desktop.
Okay. All right. So first steps, as I said, 24%. That translates into almost 1,400 companies. We've got a lot of work and a lot of diving into. So let's walk us through first things. What are the requirements that you need to basically look at to meet some of the companies that you are following and why it's important, I guess, for our viewers to follow as well?
I think the one in its qualitative, I think it has to be a company that you and I would consider investing in
Okay.
after we've looked in at it. But secondly, it has to be probably something that catches our interest. It has to be an industry that's interesting that we know about as business people. So in this show, we're not going to be talking about charts or looking, when is a good time. That stuff is useful, but this isn't what this show's about. We're going to be approaching things more like Warren Buffett or an accountant. We're going to be looking at businesses that capture our interest and talking about how they are financially and what we think the trends are for them in the future.
So free cash flow, outstanding shares, how much revenue, market cap, ownership structure, all the generics. I wouldn't say generic
Well,
stuff, the important
dividends
stuff, and
and
dividends.
dividends. Yeah.
Okay. I know that you want to explain a few other things, but before we dive into that one more time, it's just like, where do you think is the main confusion right now that's currently going on in the small cap space? From what I see, there's a lot of insiders that get involved in the early rounds. They get cheap paper. Then the retail investor is caught with their pants down and basically they lose, 75% of their money. That's not what we are focusing on here. These are real opportunities trading on real exchanges. And as you said, between like I know we talked about market cap size, but sales wise, you said between 250 and 2 billion, if I'm correct.
In revenue per year. Yeah.
All right. So let's actually bring up a chart that I think you actually I want some of our viewers to visually see. But this is the chart, some of the things that you've just highlighted on the requirements, but maybe you want to walk us through some of the stuff that you just outlined.
Yeah. So the types of things typically I'm going to be looking at is what is the revenue of the company, but what is the prospects for the revenue growth,
Okay.
and what's happened to the revenue growth over the last 3 years. We want to make sure that it has real cash that it's earning. So we look at something called leverage free cash flow, and that's essentially the cash that you have discretionarily after you paid all your bills, including your interests and taxes, which often people quote numbers not including, but taxes are real. So are interest. The last time that I checked, we're going to look at what's their chance of going bankrupt. We're going to run a credit check on the business, and then we're going to be looking at their dividends. But then we're going to talk about their plans. What do we think of the industry that they're in, and how are they executing in that industry? And we'll look at things like ownership structures as well.
All right, I'm looking at this stat now. So all caps, currently there's over 49,000 companies globally, is what I'm seeing here. Mega caps make up 57, but as we scroll down more and more, like you said, almost 12,000 small caps between 250 million and 2 billion. All right, without further ado, let's now jump into some of the stuff that, we why people are here. They want to know some of the companies that we're watching and why. So is there an example that you could bring up based on your first company? And again, let's walk through some of the requirements that need to be met.
Yeah, I wanted to pick an example through my research that I thought demonstrated our thesis so strongly.
Okay.
And an example is a company, Corby Distilleries in Canada,
Okay.
located close to where you are. Their main manufacturing plant close to Detroit, Michigan.
Drive by
on the Canadian side. Yeah.
almost once a week. Okay, company trades on what exchange in Canada and under what ticker symbol?
Yeah, so it's the TSX. You could buy it at CSW.A on the TSX, or you
Okay.
can buy it over the counter in the US on CRBBF.
Okay. So let's dive into a little bit more. So where is this, I guess, company today and I guess the industry that they operate in? Is it growing or contracting?
Yeah, I would like to step back, just tell you a little bit about their fascinating history
Okay.
first. This was a company that was started in 1859 in Corbyville, Ontario, which was named after the family Corby name.
Okay.
Um, they had some challenges. They survived prohibition. That's a pretty difficult thing to go through when you're a liquor company.
Yeah, just a tad.
And so they were creative. They merged with another company called Wisers in Canada, which had a
Yeah.
very famous
Yeah.
history. So they survived that, and they've been doing well since. They changed their name back to Corby in 1969. But they did a big transaction a number of years ago where there's a huge liquor conglomerate in France
Okay.
called Pernod Ricard.
Okay.
And they were, that company acquired a controlling interest of theirs,
Okay.
which they control 51% and own about 48% of the company. So investors have the opportunity, essentially, to invest alongside this huge liquor conglomerate in France.
So what are they doing revenue wise per year?
Yeah, so their revenue is $191 million a year. So this is
Okay.
real, and their leverage free cash flow in Canadian dollars is about $40 million a year. So again, that term's not used a lot. It's my number one term that I look at is how much cash do you have left over after you pay all your bills, including interest and taxes?
Why do you think that's important? Why don't you think enough people are actually following that stat? Because that to me seems like common sense. You need money in the bank.
We have switched in the last couple decades to wanting to report terms like EBITDA,
Yep.
which have decided that you're not including interest and tax payments and depreciation, which I think is a real expense. And this is because I can see where this is very important in mergers and acquisitions, because if you're buying a company, you may not have the same tax rate in your country, or your cost of
Yep.
capital is lower. So you just want to look at what they're earning off operating profit. But I think as an investor, I really want to know, if I have a business, I want to know what cash do I have at the end of the month. That's most important to me. So I think as an investor, I favor looking at these numbers. And when you look at these old established companies,
Yeah.
um, this is something that they have.
So
And
this is
this
a
company
company.
has 40 million a year.
So, over 150 years old. Why don't you think they're actually, I realize off the top I've outlined that, a lot of the banks are not providing as much research anymore, but this is a company that's been around for 150 years. Why don't you think they're getting coverage or haven't gotten any coverage in quite some time?
Because they're not spending any money on investment banking.
Hmm.
They're sitting on net working capital of $100 million. So net working capital is your cash that you expect to have in the next year, including your inventories, things like that. So if they want to do a transaction, and here's an interesting point, they did a huge transaction, which we'll talk about in a bit,
Yep.
for Ace Beverages. They didn't need to call the investment bank. Instead, they're like, "Hey, we're sitting on a bunch of cash, and also we have this parent company that has a ton of money. If
Yep.
we want a bit of a line of credit, we'll go to them." So all they paid for is they had to do a fairness opinion to make sure that their line of credit rate with their parent was similar to other bank rates. So they paid National Bank Financial a small amount of money for a fairness opinion. They're not spending money at
Hmm.
all on investment banking. So if I was running an investment bank, I wouldn't cover this company. There's no
Right.
potential to make money off them.
Yeah.
And I'm not saying that negatively. I would make the same decision as an investment bank to say, "Hey, to my analyst team, there's no chance to work with this company. Let's move on to some other names."
Yeah.
But here's the
Okay.
irony.
I think that's
If
important for people to understand, right?
Yeah. And the irony is, good, excellent businesses don't need to raise equity and don't need to raise debt.
Yeah.
So it's counterintuitive when it comes to coverage.
So slow and steady and consistency obviously is key, I think, for any company. But you do need to show some sort of signs to like see growth. And I know there's been some conservative growth year over year. You want to highlight some of those numbers?
Yeah, so this is one concern I would have about the business
Okay.
before they made a material change. Over the last 3 years, this is a number I love looking at, is what is their compounded annual growth rate in revenue. Your stock is not going to go up in value if you're not increasing revenue. So over the last 3 years, theirs was only 2%. So that's a red flag. And that's because of the industry that they're in. Liquor, wine, and beer is only expected to grow at about 4% a year globally. And
Yeah.
places like Canada are growing slower than other global places.
Why is
So
that,
they're not,
you think?
well, I think there's a trend. I think we all know that, alcohol, if you do decide to make use of it, should be in moderation or less. But we're seeing a lot studies about that. Um, but for them, they noticed a statistic that they executed on. Pre-mixed beverages are growing over the next 10 years, expected to be about 13% a year.
Okay.
And this is a trend with millennials and younger. We see this in advertisement. They want
Absolutely.
pre-mixed cocktails. Absolutely. So they made a huge acquisition with Ace Beverages.
Yep.
They had cash. They had a credit line from their parent company. And this is expected to increase their revenue by 35%.
Wow.
Now,
Okay. So they went from 2
we
to 35 in 1 year, you're
yeah,
hinting?
well, okay, so plans are a beautiful thing, but let's look at some numbers. They only did this transaction about 9 months ago.
Okay.
Um, Already their last 12-month revenue growth, so that goes back to a time even before the transaction, is 17.8.
Okay.
So
So
they've really turned this ship around with this acquisition.
huh. That's interesting. And the backing of a big company. It kind of reminds me a little bit of the Canopy Growth story that we did earlier this week. And they, them reaffirming that the Constellation brand parent company is basically backing them for the long haul, which is a big voter confidence and obviously gives investors some peace of mind as to where that's going. But would you say that's kind of similar to like how they're involved with this company from France?
Absolutely. Paramount and Constellation would be, kind of similar situations.
Yeah.
And these companies want to make acquisitions and lock down. And you have the opportunity as an investor to go along with the thesis of these very large organizations.
Okay, so next up, ownership structure. What's the share structure look like? Can you highlight some of the key components that you found?
Yeah, so the mother company in France owns just under 50%, and they have just over 50% of control. There's a 3% difference. So it's not an abusive situation where there's these super voting shares or whatever.
Yep.
When you come along as an investor, you do have your rights as an investor, but there is a majority owner that provides one, the opportunity for the company to distribute its famous products.
Hmm.
And then, secondly, also provides things like line of credits when there's times for acquisitions or things of interest.
Hmm. Stock is again, how many outstanding shares you said?
Yeah, it's about 20 some million shares. It has a market cap
So it's tight.
of $376 million dollars. But it's an interesting play that a retail investor can get in based on the volume. And there's a 6.6% dividend waiting for the management to execute on their revenue growth plan.
What are we seeing on average daily volume over the last 5 days or even 30 days? Is
Yeah,
it
let's take a look. We're not going to make it up. We'll just look at the actual statistic. I'll pull it up here for you.
20 million though outstanding shares? That's a tight float. What's the stock? It's trading at just over $13, you said?
Yeah, just over $13. So there was average volume over the last 3 months is 12,000 shares a day. So
Light.
it's tight. There's not a lot of interest, but that's interesting. If people start to change their opinion and get interested in this, the stock, these stocks can really move because of that.
Yeah. Okay. Next up are financials. They currently have a market cap of 376 million. As you said before, we love leverage free cash flow. At least you do. And you
Yeah.
explain why $28 million. So cash in the bank is what matters. So walk us through, I guess, your TDR score on what impressed you the most about their
Well,
financials.
well, let's companies, when you want to get a cell phone in the US at Verizon or
Yeah.
AT&T or in Canada here at Rogers, you're going to get a credit check. And let's think about this for a moment. Um, the company is thinking about getting into an agreement with you for the next 2 or 3 years that you owe them $80 a month, and they want to check your credit. Okay, it makes sense. But so often, stock investors do not do a credit check on companies. This is something, one of the first
That
things I
is
always do.
important stat to share, important note to share. That is
Yeah, it's
extremely
amazing.
important.
People don't. Yeah, you're going to make a $50,000 investment in a stock. You don't check the credit. Yet AT&T or Rogers in Canada does this to get into an agreement with you for $60 a month. Where's the logic?
Yeah, good point.
Yeah, yeah, yeah.
And easy
Yeah,
to
so I
do.
did so you can do a credit check very easily. So there was a
Yeah,
famous professor, his last name was Altman, and he basically came up with a formula that you could do a credit check on a company.
yeah.
So I run this. He predicted the fall of Enron and also the banking crisis in 2008 with these numbers.
Mhm.
So we use FICO scores when we're checking people's credit. Personally, you want to have over 700 or 800. That means you're a low credit risk. Same with companies, but the numbers are a little different. If you're above 3, you're low risk. If you're between 1.8 and 3, you're in a gray area. There's
Right.
risk. And if you're below 1.8, this means this is concerning where you're at.
Mhm.
This company comes in at 11.2.
Oh, so it's strong.
But this is what happens. They have net working capital of $100 million.
Right.
They have leverage free cash flow of $40 million. This is what happens. And also, to if they ever want to do a purchase or have a need for additional liquidity, they have a parent banking them that extends them a line of credit if they want.
Hmm. So Corby Distilleries trades on the TSX and over the counter in the US, currently trading a little over $13 and currently has a little more than 28 million outstanding shares. So based on everything that we've highlighted in this example, what are the three main takeaways that you want to share with our audience?
Company stocks have a disastrous outcome when they get into financial problems and they go bankrupt.
Yep.
So I'm not concerned here. We've checked the credit.
Okay.
There was a bit of a red flag because the whole alcohol industry is not really growing. And they had 3-year revenue growth around 2%. They solved this with the transaction with Ace, and they've had very strong revenue growth now.
Mm.
So that's something. Third, who doesn't like getting paid to wait? A 6.6% dividend yield that is well covered by their leverage free cash flow.
That's healthy. Well, I hope that basically helps explain to our viewers some of the requirements and some of the approaches that Bill's going to be doing. As I said, a lot of research that we're doing with over 1,400 small cap North American companies alone. And we're going to feature this every Sunday night on Trade to Black, Small Cap Sundays. Any companies that you like, any companies you want us to review, we'll do a deep dive in it and we'll share it in the podcast. Leave comments below. And as usual, smash on that like button and let's share as we continue to basically get our message out there, take these videos viral, and to give people more information. I know next Sunday, we're probably going to do less about what the show is about. This is kind of setting the stage as to what we'll do each and every week. But more importantly, next week, we're going to feature probably 4 to 5 companies every single Sunday, which is going to be a lot of information for people to really understand. But I think this is important here today to give you kind of a real walkthrough as to the industries we're going to be covering, the indexes that we're going to be covering, our distribution partnerships that we're going to be pushing this stuff out through, like the Bloombergs, Charles Schwab's, and Raffinitas of the world. So we are going to give this attention to a lot of the institutional investors based on the research that we are providing. But all in all, great first show. And I think this is going to be encouraging as we do this every single Sunday.
Yeah, the one thing I would add too, like feedback really does shape the show.
Yeah.
So leave a comment and we're going to adjust based on that. Sincerely, we take it very seriously internally to adjust to the feedback of our viewers.
Yeah, well said. All right, you start. Have the a rest, good of the rest of your evening, and we'll be speaking with you throughout the week. But look forward to doing this next Sunday as well.
Yeah, thank you.
All right, thanks, Bill. Hey everyone, thanks for watching our latest podcast. What'd you all think? Is there any information that we're missing? Is there anything you want us to cover? As these industries heat up, we're getting access to more and more big hosts. So let us know the questions that you want us to ask for you. As usual, smash that like button. We want this to go viral. Click on that bell for all notifications for the latest interviews that we're doing. And as usual, let's build this community. Subscribe to our channel because we appreciate it, because we wouldn't be here without you. Thanks for watching, everyone.